Hello, good morning. It's Thursday the 28th. I'm FX Plu and this is the market brief. So sterling struggled to make any more headway yesterday as the market decided that the recession concerns and the residual risk of no-deal Brexit outweighed Haldane's optimistic comments. His chat, of course, was based on the PMI data, and this might have been slightly overplayed. While the improvements hopefully confirm things have bottomed out, the situation is, of course, still truly dreadful. In turn, it will probably take a little more than comments from the top dog to completely remove any risk of negative rates, or certainly remove them from the ongoing conversation. And the market is already looking ahead to next week and the manufacturing and services data due, which will help see if Haldane's optimism is justified or not. The calendar this week is pretty light, and yesterday the market took stock and took profits. Sterling sold off to a low of 122.05 against the dollar. Over in the US, there is continuing confusion over how the economy will fare going forwards, with plenty of different views from analysts, officials, and of course central bankers. The market seems to have continued faith that the Fed maintains a degree of control, and also that the Fed has a backup plan should the economy turn south, but the future is unclear. The latest idea is that travel restrictions may be imposed between different states to combat the differing pressures and indeed the differing appropriateness to lift the lockdown over there. On the calendar today, we have durable goods and weekly jobless claims. Neither of those are expected to make particularly pleasant reading, but there also shouldn't be any nasty surprises either, because the market is already gearing up for non-farm payrolls due next Friday. And of course, there's no such thing as reasonable expectation for the headline number there at the moment, but it's likely that the employment rate will remain pretty close to 19%. The European Commission's been on. They've announced a series of measures totaling 1.85 trillion euros. You'll recognise that this dwarfs the 500 billion euro from the Franco-German grant package, but currently is no further down the road because it holds the same caveat that it needs to be formally approved by all the EU members. So don't hold your breath for any progress there. The market reaction was to buy euros up over the 110 level, but the classic EU lack of follow-through saw euro dollar top out at 110.30 and fall back to 109.60. As we saw with the 500 billion, the market needs a little more detail from Brussels for the euro to hold on to any of the gains that are generally delivered as a knee-jerk reaction to the news. So we need a little bit more on that one. We'll keep you posted. That's it from me. Have a great day. I'll see you again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.